And so I do find that high quality equities are useful in this environment. And sometimes even banks, for example. I mean, even though we're talking about currency problems, if a bank is shorting the currency at a lower rate than they're long the currency, and they're relatively cheap relative to their earnings or assets, they can work well also. So I've been reasonably bullish on certain countries' financial sectors, even as I expect currency problems. So I do find that equities are a great balance with hard monies and other hard assets in most environments.
Hey everyone, welcome back to Everyday Finance. Lyn Alden breaks down whether Bitcoin is approaching a pullback or preparing for its next major upswing. Bitcoin has gained more than 5% overnight, and the government's shutdown in the United States appears to be coming to an end. Traders expect that the government's reopening will bring fresh liquidity into the markets, boosting risk appetite and potentially pushing Bitcoin toward the key 110,000 to 112,000 liquidity zone. Confidence strengthened further after President Donald Trump announced a $2,000 dividend funded by tariff revenues, adding momentum to an already improving market. Over 85% of prediction platforms indicate that the shutdown will end this week, which could bring back billions of dollars in treasury cash. Combined with Bitcoin's recent close above its 50-week moving average, the overall setup is leaning bullish. A decisive move above 115,000 could spark a short squeeze and drive the price toward 117,000.
Yeah, it's a good set of question. I mean, that's kind of the $1 trillion question. The first thing I would do is resign because I don't think I would be able to fix it, to be honest. That's why I don't work in public office. I work in private markets, kind of handle my own situation as best I can rather than trying to govern everyone's ledger. If I were to give advice or try to do it myself, it's sort of like a theory crafting mindset. It would be some of the stuff we already talked about, which is to recognize in the US's case that we are a fading empire. Empires, again, those that are rewarded by it. So the military industrial complex is rewarded by being an empire versus the manufacturing base is not even helped by it. It's actually harmed by it compared to countries that aren't leaning into that empire direction. So I basically say, okay, we're in this fading empire path. How can we, most gracefully transition in that regard? How can we pull back from a position of strength? How can we continue being this, shining republic on a hill that people want to immigrate to, that people want to do business with? It's viewed as kind of the most free and pretty wealthy on a per capita basis and happy. How can we optimize toward that? So instead of trying to maintain dollar dominance, I would promote neutral reserve assets. That's the natural state of affairs. I would support a more multi currency world. And I would try to gear the domestic system more towards that. So one would be basically whenever you have this much debt on the public ledger, you're going to default. The question is, how are you going to default and who are you going to default to? So you can default nominally, which generally doesn't happen when the debt's in your own currency, or you can default through purchasing power. In some way, we already have. In the past 5 years of bonds, it's been absolutely lighting investor returns on fire in terms of purchasing power. We've already kind of done this like partial default compared to every other asset you could have owned pretty much. But I don't think we're done yet because we still have very high public debt and high interest expense. There's also just entitlement systems that are just completely out of control. They were designed with the idea that every generation is going to be bigger than the next generation, so that you're always going to have a low retire to worker ratio, and that's just not the case. It's just not geared correctly. So we have this gigantic insurance state. The US has the highest per capita healthcare costs in the world. So even though Japan on average is like 10 years older than us, they spend on average way less on healthcare than we do and longer life expectancies. So basically, I would kind of do the opposite of what Doge did. So Doge, they went after, so if you look at the government spending pie chart, there's defense, there's Social Security, Medicare, you can put veterans benefits in defense. And then there's the smaller part of the pie chart is like everything else. It's like the FAA, it's like the parks, the rest of the pie chart. That obviously could be optimized, but that's kind of pretending that there's not a bigger problem. The bigger problem is the defense, the bloated healthcare system, imbalanced Social Security. So basically, that's what I would try to right size to try to clear out pork from the defense spending, actually focus more on defense, not on hundreds of military bases globally. So I'd say pull back, make sure we speak softly and carry a big stick. So don't disarm ourselves, but have a military design toward defense of ourselves, occasional defense of our allies, global alliances, not just, being everywhere all the time and not optimizing toward congressional pork. Two, I would stop subsidizing, like, our food policy was kind of geared toward making sure starvation doesn't happen. So subsidizing like unhealthy food, which then after decades gave us tons of health problems that then bloats our healthcare system. And then in addition, our kind of hybrid public-private mess, it makes it so price discovery doesn't happen. If someone goes for a procedure, they don't even know what the price is. The mechanism of kind of buyers and sellers setting prices just doesn't really happen in the US healthcare system. Many other places too, but especially the US. So I don't think you can fix this without tackling the healthcare system, which is incredibly hard. I wouldn't have any illusions that I would accomplish it, but that has to be accomplished eventually, either through crisis or preferably before this crisis. And get back toward those areas of government being more limited. And then along with kind of a one-time major currency default, basically a currency devaluation. Now, where currency devaluations fail is basically when they don't get the problem under control. So after World War II, the US, I mean, they had a major currency devaluation, but then they did shift toward austerity. They didn't keep running big deficits. I mean, they had the benefit of really good demographics, they had an innovation boom, all of this, and they used that to shift toward austerity. So, okay, it's okay. Bondholders got killed, but then it stabilized, rebuilt confidence, go from there. That's kind of what you have to do is basically say, we already have too much debt. Generations have made promises we can't do. How can we default on some of this in the fairest way possible and then stabilize to try to keep it together for future generations? Those are the things I would be trying to do. But again, it's much easier said than done. It's much easier to get your own house in order than to try to fix the ledger that 300 plus million Americans use and the whole world's tied into as well.
Traders are zeroed in on the 110,000 to 112,000 range, a zone packed with heavy sell-side liquidity. According to Coinblast, the bulk of sell orders sits between 111,500 and 115,000, forming a key resistance band that separates Bitcoin's current consolidation from a potentially explosive breakout. If Bitcoin manages to push through this level, analysts anticipate a wave of short liquidations that could drive the price sharply higher. The macro backdrop also looks increasingly favorable, with Treasury liquidity flowing back into the market, technical indicators strengthening, and investor sentiment improving. Lyn Alden points out that this combination of returning liquidity and compressed market structure has historically preceded major Bitcoin rallies in past cycles.
I'm bullish on high quality equities. I maintain a three-pillar portfolio, which is one is hard monies and commodity producers, things like that. The other one is profitable, high quality equities. And then the third smaller pillar is cash equivalents for liquidity and rebalancing and things like that. So the equity component is very large for me. And I try to be somewhat globally diversified. And quality is relative to price. So if something's extremely high quality, I'm willing to pay up for it a little bit more. If something is medium quality, I expect to get it at a bargain. The reason that equities can do pretty well in a fiscally dominant environment, especially if you don't overpay for them. I mean, in addition, just for all the reasons that your listeners know, equities are good. I mean, you're owning a profitable business. It's doing more than a inert substance is doing. It's a bunch of people working every day to try to increase the value of your investment. I've made the point before that one of the best products that Procter and Gamble ever sold was their bonds. Same thing for Coca-Cola. Another way of putting it is that, Coca-Cola has been profitable like every year for like a century, more or less. And so why do they have 40 or 50 billion in debt? And the answer is because they can. Because, especially before the current high rate environment, they could issue bonds at 2 or 3% for 5, 10, 20 plus years. And they are basically shorting fiat currency for low single digits, while that currency was growing in broad supply by an average of 7% per year. And so they have this big fiat currency short that, unlike a hedge fund or something, can't just be called back on them like a margin loan. They've got this kind of permanent short out there. And then they use it to buy anything that will give them a better return than 2, 3, 4%. They will buy back their own stock. They will make acquisitions. They will do all sorts of other things. And so one of the reasons why equities do well during currency debasement, or at least hold up pretty well, is that they're shorting the currency and then they're long assets that are in general better than the currency. Now, if their revenue streams are denominated in foreign. So if you have like a developing country equity, and let's say they get a lot of dollars in income and their expenses are in local currency and they're short in the local currency while they're earning dollars, that's a really good place for them to be in if the dollar strengthens relative to their currency. Whereas obviously the problem is if you have debasement, their own revenues are also being debased, which then they're trying to recoup with price increases over time. So it's not a perfect defense against fiscal dominance and inflation and debasement and capital controls and all these sorts of things, but it's one of the better things you could be in because unlike a bond that might pay you 4% a year with no growth, in many cases you can get an earnings yield of 5%, 7%, 10%, 12% that also grows over time. You get dividends you can reinvest into owning more of the company, or they do share buybacks and you own more of the company. And so I do find that high quality equities are useful in this environment. And sometimes even banks, for example. I mean, even though we're talking about currency problems, if a bank is shorting the currency at a lower rate than they're long the currency, and they're relatively cheap relative to their earnings or assets, they can work well also. So I've been reasonably bullish on certain countries' financial sectors, even as I expect currency problems. So I do find that equities are a great balance with hard monies and other hard assets in most environments. I would say writing and work-life balance. There are different phases of a career. So at one point, my research business took off tremendously. And then also the pandemic happened. Macro was crazy. Everything was crazy. Money printing was happening. I had to kind of lean into that really hard. Didn't really have a choice. It was just really hard to keep up with. If you kind of run at full speed for a very long time, you burn out. Or like, where you're one of those people like 40 years went by and you wonder, did you ever live? That's kind of the classic trap that people could fall into. So, especially after 2022 and 2023, I wrote Broken Money while doing many other things, like running my research business and other work, which was a very kind of all in period. So I kind of needed a break for a period of time. And so I've been optimizing for health, optimizing for getting outside more, optimizing for, just kind of having more balance of interest. Sometimes things like with Broken Money, for example, for years I was hesitant to write a book because it's one of the lower ROI things you can do in many cases, especially if you work in finance. It's super tedious, anyone who's written a book. And so I resisted writing a book until a very clear picture of the book formed in my head. And then it was too distracting not to write it. I had to write it. And with every year that goes by, I mean, that's one of the happiest things I've done. Like, that's one of the things I'm most proud of. And it's partially because it's an artifact that is a self contained thing that has kind of a life of its own now, more than a collection of articles, more than certain investment decisions. This is like an artifact that persists. And I find that interesting. I guess the funniest answer of how I'm spending my time is I've actually been writing a sci fi book for similar reasons, which is when you're in kind of a crazy environment, like we touched on, not just finance here, but what happens geopolitically in these environments. There's also the question of how does tech change things with AI making it so you can like say, especially in the future, make a deep fake video. It's hard to even tell if it's true or not. It used to be that videos were, if you saw a video of something, it was obviously that thing happened. Increasingly, that's not necessarily the case. And so how do you even know what's happening in the world if it takes far more work to untangle lies than to spread them? In addition, in a world of capital controls or governments trying to seize power, what does that look like? And so I've actually been exploring that to some extent in fiction. So on one hand, it's hopefully entertaining, but then also touches on kind of extrapolates out current themes for many decades to kind of explore what things are like. And it kind of forces me to my background's engineering. I've always found technology interesting, obviously, but when you're so focused on macro, it's easy to miss a couple years worth of what tech's advancing pretty quick. You don't really have your finger on the pulse of it. So it's kind of like it forced me to do a check there on a bunch of technology related stuff. I also generally find, and Dalio is kind of an exception in this, a lot of people that work on finance, they become technicians, meaning they know how to trade the current market really well, but they can't really envision that structurally changing. They don't really picture an environment that they never knew. And one of the things is by having kind of diverse interests, whether it's exploring fiction, science fiction, whether it's exploring philosophy, whether it's exploring history, you either broaden your scope forward or broaden your scope back or up or down, you have a bigger view. So instead of being a technician, it helps you kind of be a strategist or to have ideas in your head of how things could change that are maybe outside of the box. I've been leaning a little bit to fiction, working on my second book, which will come out in 2026, while maintaining these other things. And I think it's partially just because I want to maintain flexibility and plasticity with my mind. I want to enhance the creativity because I think creativity is one of the skill sets we need to cultivate in these kind of crazy times when things are kind of more normal. It's more about operation execution. Whereas when things are more tumultuous, having ideas that are outside of the box and being aware of history and aware of possibilities for the future is maybe how you navigate that better.
XRP recently pushed up to $2.53, drawing attention as market sentiment improved. But despite the price jump and excitement following Trump's $2,000 stimulus announcement, on-chain data is signaling increased caution. Profit-taking among long-term XRP holders has surged 240%, with realized profits climbing from $65 million to over $220 million. This wave of selling has coincided with a drop from 2.90 to 2.30, indicating that whales may be offloading into the rally rather than accumulating. Sentiment data supports this view, showing wallets holding 1 to 10 million XRP, reducing their balances by about 500,000 tokens within 48 hours. However, after approximately $650 million left the market, whale outflows have slowed, indicating that a bottom may be developing. If XRP can break back above the 2.80 and 0.80 resistance levels, it could still make a run toward $3 and revive optimism for a broader recovery.